What is up, everybody? Thank you for joining me today on Crypto Lit. I am Nathan, and today I've got a pretty interesting topic that I want to cover for you guys. You may or may not know, in my day job, I'm a realtor, and I've got a passion for helping people buy property and getting people into good homes. Now, one of the cool things is that I can join my passion for real estate in with my passion for cryptocurrency. So today we're going to go ahead and cover some ways that you can use your crypto to purchase real estate. You may have been investing in crypto for quite a while. Maybe you've got some good sized bags of crypto and you're like wondering how you can transition that wealth into some property instead. So today we're going to go ahead and cover some of that and take a look at the different ways that you can use your crypto to purchase property. If you haven't already, please go ahead and hit that like and subscribe button for me as we get into the content. Just liking and subscribing to the channel really does a lot for me, so I really appreciate each and every one of y'all who watch the videos. Click the like button and subscribe on it. Feel free to share it as well with your friends and family and comment below on what your thoughts are on some of these methods that we're going to talk about for how to purchase real estate with crypto. So let's go ahead and get on into it. So we're going to cover 5 methods for using your crypto to purchase real estate. And by no means is this 5 methods an exhaustive, complete coverage of every way that you can use crypto to invest in real estate. But these are the ways that I've researched into on how you can take your crypto earnings and turn them into property. So the very first one that we're going to cover is selling crypto for your mortgage down payment. Next one is buying crypto or buying property directly with crypto like it's a cash sale. Crypto-backed mortgage, buying a property as an NFT, or fractional ownership through property tokens. So let's go ahead and jump into the first one. If you wanted to use your crypto for a traditional mortgage, say you have maybe $100,000 in crypto that you want to turn into a down payment in a traditional mortgage. Now you're most likely going to get a conventional loan, and what you would do is to be able to use your crypto as a down payment, unfortunately, you'd have to sell it. So you go onto an exchange, sell the cryptocurrency, transfer that into USD, and then have the USD withdrawn to your bank account. Now, a couple of key points to know about when you're doing it this way, when you're using crypto as a down payment. Your lender is most likely going to need to be able to see how you sourced that crypto, meaning they're going to have to see where it came from. You can't just have it transitioned in from some mysterious account, sell it, and then expect to be able to use that as a down payment. Lenders have to keep everything above board and work within the laws of the country that you're in. So in the US here, they're going to have to work under the anti-money laundering laws and things like that. So you're going to have to prove where you got that crypto from. And that can be a statement from your exchange where you purchased it from, or how you were paid in crypto for a job, maybe something like that. But you're going to have to show where that crypto came from. The other thing that you're going to have to do is you're going to have to hold the proceeds of the sale of the crypto in your bank account for about 60 days before you can buy property. So if you are looking to use your crypto as down payment, you may want to go ahead and target the time that you would like to have a sale completed. You'll want to go ahead and sell your crypto about 30 days before you, 30 to 45 days before you start looking for property. Let's assume it's going to take you a couple of weeks to find a home and get it under contract. So, by the time you get something under contract, what your goal is to have that cryptocurrency already in your bank account for about 45 days to 60 days, so that when you get it under contract, as they're going through the initial option period or first period of doing your due diligence on the home and getting it inspected and things like that, Your crypto then is hopefully seasoned within your account for 60 days so that by the time your lender starts doing underwriting, that crypto's already been in there as long as it needs to be, and there's nothing inhibiting them from including that as a method for your down payment on the property. So those are a couple of things to keep in mind when you're looking to use your crypto as a down payment on a traditional mortgage. The other thing to keep in mind is selling crypto and maybe transferring it or using a 1031 exchange so that you can get away with taxes. That doesn't work. You know, some people have asked if that can be done. No, when you're using a 1031 exchange, it has to be an exchange of like property or like assets. So selling crypto and then transferring it into property, you can't use a 1031 exchange to get around taxes on that crypto sale. And if you don't already know, every time you sell that crypto, it is a taxable event. So selling your crypto for down payment on a property in a traditional mortgage will be a taxable event. The sale of that crypto will be taxed. You'll want to talk to a tax professional who's proficient in cryptocurrencies and has been working in crypto for a couple of years, so they have the experience and they can advise you on the kind of tax implications that you're going to see from the sale of your crypto. The next method we'll talk about is using your cryptocurrency to purchase a property just like it's a cash sale. You've got enough crypto in your accounts. You want to go ahead and use that to purchase a property outright. That's getting a whole lot easier now than it was just a few years ago, and it's all thanks to a company called Proppy. Proppy is the company that did the first sale of a real estate property as an NFT. And I'll get into that a little bit later, but Proppy has experienced title and escrow officers around the country. They say on their website that they can do a transaction in cryptocurrency anywhere in the US for a piece of property. So basically how this is going to look is you would do a property purchase through somebody like Proppy. It could be Proppy or it could be another company that comes along, but you'd be able to go out and find a piece of property that would accept payment in cryptocurrency. Some of the benefits of doing it this way is everything is done on the blockchain, so you're going to have very quick transactions. They say it can happen within about 2 to 3 weeks. So closing on a piece of property through the Proppy title company is a pretty quick transaction from what Proppy claims. So the other thing that they say is it removes the risks of traditional wire fraud in a real estate transaction. Proppy has an experienced title and escrow officers that are used to working on the blockchain. One thing I will note about this is, again, it's a taxable expense, or taxable event rather. So when you use your crypto to purchase that property outright, it is a taxable sale of your crypto. So you need to account for not only spending your crypto on the property, but the taxes that are going to be due at the next tax filing season because of that sale. So again, talk to your tax professional who's proficient in crypto to get guidance on that. So I'll go ahead and flip over to the website for Proppy and show you how you go about finding something that is for sale, somebody who's accepting crypto. Because, you know, in my local MLS or listing service, there's not an option there for you to check off that you will accept cryptocurrency as payment for the house that you're selling. You know, there's the option to check off that yes, you'll accept FHA financing or VA financing or conventional financing or cash. But there's no checkbox to say that, yes, I'll accept crypto for the sale of my property. And so if I'm out there looking on the local listing service, how am I going to know that a property is accepting crypto? They haven't come around and done that yet. Now, we do, as realtors, need to lobby for that to be added into our listing services so we can start facilitating cryptocurrency purchases more in our markets. But at the moment, that's that's not available. So Proppy has gone on ahead and done their own marketplace online where you can come in and see listings. And these are going to show listings across the country. They are offering this service, like I said, anywhere in the US. Right now I've got Miami pulled up. Proppy, I believe, started in Florida, so I think that there's more of a base use that's been going on in Florida. We have a little bit more examples to look at, but I did see a bunch in California. I saw some on other East Coast areas, some down in Texas areas. So, you know, they do have listings on their website all around the country. So I've gone on ahead and pulled up Miami, and we're going to take a look at this one right here in Fort Lauderdale, roughly a $2 million property. One of the things you need to make sure that you do, because when you come in, it's going to show some properties that are not accepting crypto. So what you want to do is you come all the way over here to the View All Filters, click that button, and make sure that you check off this checkbox here saying accepting crypto, and then run your search. And that'll pull out all the properties in the city that you're looking at that are accepting crypto. And you can click on one of them and go, it'll take you into that property listing, and you can look at it and look at all the pictures that they've got. So this property in Fort Lauderdale is currently on the market. They are accepting crypto for payment for the property. And you can look over here on the right hand side of the listing underneath the price, and it says accepted currencies. Well, they have US dollars in there. Of course, they're going to allow you to pay in cash if you want to, but they're also accepting Ethereum and Bitcoin. If we click this View More button, I'll show you the other ones they're accepting. They're also accepting XRP and USDC stablecoin. So a lot of different options here for you to be able to pay for this property in cryptocurrency. And if you step through the pictures, you can look through them, and if you're interested in doing things in progressing further on purchasing this property or going to look at it, reach out to your local realtor that you work with, have them schedule an appointment, have your realtor reach out to the seller's agent and set up an appointment for you to go tour the property. Now, one thing I will say, if you are an agent, a real estate agent, Proppy has a course that you can take to be able to become certified as a realtor on their website or on their marketplace. This is big because it gives you another way to connect with sellers. So if you are interested in cryptocurrency and real estate and you're a realtor, you may want to look into doing their certification course so that you can be listed as a certified agent in your marketplace on Proppy. And as I mentioned, if we look at Proppy's title company, I'll go down here to the bottom and highlight under locations. They'll tell you whether you have buyers on East Coast, West Coast, or wherever. Their team can assist you with any transaction throughout the United States, whether on cryptocurrency or NFT transactions. So really neat method for using a cryptocurrency to purchase a property outright using Proppy Marketplace. The next thing we're going to cover is doing a crypto-backed mortgage. Now, there are several neat things about this. First thing is, this is the one thing that I've been able to find that you can use your crypto to purchase a home, and it's not necessarily a taxable event right at the time of purchase. There's a reason for this. It's because you're not actually selling your crypto. You are depositing your crypto with a financing company, and they are then issuing you a mortgage based on the crypto that you deposited. Now, the one that I've seen, the main one that I've seen is Milo Credit. You can go out and look up Milo Credit on the internet, go into their site, and they will look at your cryptocurrency and base it on only that cryptocurrency. They will issue you a pre-approval letter. So you don't have to worry about a credit score. There's no credit requirements. Now, they will say on their site, if you have good credit, that helps get a better rate, but there is no credit requirements. They do fast approvals and fast closing as well. So now the one thing about Milo Credit is you will have to deposit 1 for 1. So if you're going to go out and pay $500 or buy a $500,000 home, you are required to deposit $500,000 worth of crypto with their custodians. And once you've done that, then they'll be able to close on the loan. So they can look at your crypto that you have, issue you a pre-approval. You go out and find the home that you're interested in buying, get it under contract, and they'll go through the process of then having you deposit your crypto with their custodian and go through the natural closing process. So if I was going to buy a $500,000 house, I'd have to deposit $500,000 worth of Bitcoin or Ethereum or a stable coin like USDT or USDC to be able to progress down this line. Now, you can borrow up to $5 million through Milo Credit. Now, cool thing is you do not have to have a deposit. This is 100% financing through Milo Credit. So as long as you've got the crypto, basically you can finance the entire amount of the house. You don't have to worry about putting down any down payments. They say they have amazing low rates. So you'll see here amazing low rates from 6.95%. If you're comparing a traditional financing rate of about mid to upper 5%, so anywhere from 5.5% to 6%, that's going to be a much better rate than what you're going to get through Milo Credit. The thing that you need to keep in mind, though, is Milo Credit is giving you the ability to hold on to your crypto. You're not selling your crypto, you're depositing it with their custodian and they're holding it. Basically, they're holding it in escrow through the course of your loan. So as your cryptocurrency gains in value, you are still reaping the benefit of that, right? You're not selling your crypto. You have the ability for it to go 20x and then sell it at a later date and pay off the loan. So in my way of thinking, yes, their interest rate is a little bit high, but it's well worth it for me to be able to hold on. That extra percent or maybe even 2% is well worth it to be able to hold on to my crypto, have my crypto increase in value, and be able to sell that crypto at a later time frame. Now, the crypto is deposited with one of their custodians. You'll see here Gemini and Coinbase are their main custodians there. So if you're interested in getting a crypto-backed mortgage, go over to milocredit.com. You'll want to take a look under their products menu and come down to the crypto purchase mortgage option right there. And as you're scrolling down, you'll see that, yes, they offer 30-year mortgages, and it's going to go just like a normal mortgage, right? You're going to pay your monthly mortgage to be able to do the closing on this one. The house is going to have to appraise. They'll schedule appraisals and all that kind of stuff. But if you go to the site, you can filter down through the webpage, take a look at all the terms and conditions. They even have a calculator here where you can calculate your rate that you're going to be paying, talk about how much you're looking to borrow and all that type of stuff. So pretty cool option for you if you're wanting to hang on to your crypto, avoid a taxable event. Go check out milocredit.com and take a look and see how much you can be approved for. Now, a couple other notes in regards to this. Because it is crypto-backed mortgage and crypto fluctuates a lot, there is the opportunity or the possibility of having a margin call on your loan if the value of your crypto deposited goes under a certain threshold. So if you deposit $500,000 worth of Bitcoin to take out a $500,000 loan on a house, and we then go into a bear market and your cryptocurrency drops, the value of your crypto drops 65%, they will issue a margin call on your property, and you have 48 hours to bring the ratios or the percentage of the crypto that you have deposited versus the value of the loan. You have 48 hours to get that back under 65%. If the crypto drops 70%, they will liquidate you. Okay, so you have a possibility that if it drops 70%, they're going to liquidate the loan and possess the house because your crypto is no longer big enough or valuable enough to cover 30% of the mortgage or the base value of the mortgage. So those are a couple of things to keep in mind. So with that in mind, you know how crypto can drop 10-20% in a matter of a couple of days. So my advice is this: do not do something like a crypto-backed mortgage through Milo Credit in the bull market. If we're at the top of the bull market and you say, hey, I'm going to use $500,000 of my crypto to go do this, and then we enter into a bear market and Bitcoin does its standard 75 to 85% drop, you're going to be looking at having to put more crypto into their custodial deposits to be able to keep the mortgage on your house. So don't do it in a bull market. Wait till you're in the middle of a bear market, or where we feel that you're close to the bottom of a bear market. And then this is a much more reasonable thing to look into in the bottom of a bear market, because we're really not looking at dropping another 70%. You know, if we've already, say right now we've dropped about 70% on the value of Bitcoin, maybe 74%, something along that line. Do we really see another 70% coming in? Me personally, we're sitting at 21,000 today. Do I see it dropping down to say 4,000 or 5,000? And the answer is no. So I would feel pretty safe right now doing a crypto-backed mortgage, because I don't think near the bottom of the bear market that we've got another 70% lower to go. The other thing I will tell you is, if you only have $500,000 worth of crypto and you want to go buy a $500,000 house, don't do it. Because if you do get into a situation where it does drop and you have to put more crypto deposits in to keep your ratios correct, if you put everything you had in crypto into this mortgage, then you don't have anything else left over to be able to go in and bring your ratios back to where they should be. So I wouldn't put all your money into this crypto-backed mortgage or all your crypto into it, and I wouldn't do it in a bull market. I'd wait till we're in a bear market, which we're in right now. So now would be a decent time to look into this. The next thing that we're going to take a look at is buying property as an NFT. And to me, that's a pretty cool thing. Again, Proppy makes this possible for us, the company Proppy. So basically, they are not turning the house necessarily into an NFT. There's too much right now going on with title requirements, government requirements on the transaction or sale of a home. Too much going on right now to be able to make all the documentation that you need to close on a house into an NFT that can be transferred back and forth. Now, I do think in the future something like that would be more capable as we dive more and more into NFTs and more into integrating cryptocurrencies into our everyday lives like real estate. I believe we'll get there in the future. But right now, what is available is you're purchasing an NFT that represents an LLC that owns a property. So Proppy can facilitate a sale by helping you get your property transferred into an LLC and then generating an NFT that gives ownership to that LLC. And then that NFT can be transferred around. The NFT gives ownership to the US-based LLC that owns that property. The NFT can be moved from wallet to wallet, transferred into a different wallet, but that NFT proves ownership of the LLC and therefore ownership of the property. So I think that's a really cool thing to do. This is full ownership of a property. It's not fractional or partial ownership of a property. The other cool thing with this is that buying that NFT, that property NFT, it is a DeFi asset, and you can actually use it on DeFi platforms as collateral. So you can borrow against that property NFT on DeFi platforms, which I thought was really cool. Again, though, this is a taxable event because you are, just like any other NFT purchase, you're using your cryptocurrency to purchase something. So that is a taxable event right now in the eyes of our government. So again, talk to your tax professional. The other thing to note is to do this, you will have to fill out KYC on Proppy. So both the buyer and the seller will most likely have to do a KYC on Proppy to be able to facilitate this sale. This is something though that can happen pretty quickly. I've not done one myself, of course, but I'd imagine it's as quick as just sending the crypto transaction through. Once the NFT is received in your wallet, you're then the new owner of the property. The last thing that we're going to cover on ways to use crypto to invest in real estate is through fractional ownership. And the main company that I've seen doing this is Lofty.ai. Lofty allows you to invest in property with as little as $50. You can invest quickly through the Lofty blockchain real estate marketplace. So basically what Lofty is doing, I believe they've got their own blockchain. They're issuing their own tokens on their own blockchain. So they basically will issue a certain amount of tokens for each property that they have control of. And Lofty is essentially a property management company. They're going out, they're buying up property, they are then turning around, renting that property out and managing it, and you have the ability to use your crypto to purchase fractional ownership in that property. So you're not restricted to investing in your certain area. You have the ability to invest in markets around the country. So we'll flip over to the Lofty site real quick, and you can take a look. Right now they've got about 7 different properties that you could invest in. Like I said, some in Ohio, some in Missouri, some in Chicago. But basically, you can come out there, see what property is available, how many tokens are available for you to purchase. They tend to be like $50 a token. You'll see on this one here in Cleveland, Ohio, it's almost $55 per token. So you could choose to then purchase a bunch of tokens and take fractional ownership of this property. Now the benefit of that is that you get monthly income out of this property based on the rents that they're receiving for it. So they're going to receive rent. They're going to then take a fraction of that rent and distribute it out to the token owners that have fractional ownership for that property. So that is then going to be crypto that's deposited to your wallet every month based on the rent that's coming in from that property. So one of the things you'll have to be careful about or look into real in depth is, yeah, they're going to flash around these rate of return numbers, 16% rate of return, 17, 20, whatever. You do need to go in and take a look at these though, and see how things are running. But if we go over to this one here in Chicago, and you scroll down and you look at the specifics of it, you'll see that tenants requesting this to be fixed, tenants requesting that to be fixed, tenants not paying their rent, tenants multiple months behind, they've offered them cash for their keys to get the tenant out. And this seems to be more the norm than the rare thing. So I think this is something that's interesting, but I think that they're kind of approaching it maybe in areas that are a little bit more skewed towards the rights of the renter as opposed to the rights of the owner. If you're the owner, you want to be in an area where property law favors maybe a little bit more of an equal between owner and renter, or maybe favors the owner a little bit more. So most of the areas I feel like they're investing in are in areas where property law favors the renter as opposed to the landlord of the property. So you have multiple issues on these properties where people aren't paying their rents, they're not being evicted, and rent is not being collected and distributed out to the token holders. So that's the risk you run with something like this. Now, of course, you run the same kind of risk if you invest in a piece of real estate anywhere in the nation and rent it out. You're going to run the same kind of risk, but what Lofty does is it at least allows you to fractionalize the ownership so that burden is not all on you. That said, we're investors. If we're using our crypto to invest in property as well, we want to return from it. And so although this is something I think is a real interesting concept, it's something I'm going to wait on for it to develop a lot more before I looked at getting into something like this. So that's all I've got for y'all today. Again, pretty interesting topic, I think, where we get a chance to use our wealth in crypto or our increase on what we've invested into crypto and turn that around and be able to buy property for whether for our families or for investment purposes. So owning property is always a good thing. You've got lots of tax breaks that the government gives you by owning property. So it's always a good thing to have ownership in property. It's also diversifying your portfolio. If you're full into crypto and crypto is the only thing you own, there's always a risk there. So diversifying some of it into real estate is not a bad idea. As always, everything I cover is not financial advice. I'm just showing what's out there. If you are looking into investing your crypto into property, of course, you want to talk with maybe a financial planner, do your own research, talk to tax specialists and things like that so that you're prepared and know the full consequences if you do use your crypto to purchase property. So go ahead, if you haven't already, please go ahead and hit that like and subscribe button. It really helps me out as I try and grow this channel. Everyone, I really appreciate you all. If you've watched to the end of this video, thank you very much. I'll see you guys in the next one.